as you guys already know, traveling is one of my hobbies. And anytime we travel to any new country, what I always do is, as a Forex trader, before I come back from that country, I must come with the currency of that particular country. So if you can check on my hand, I have from the pound to the dollar to the Lesotho currency. I have currencies of more than 10 different countries, all right? You can see I have currencies of 10 different countries on my hand, more than 10 different countries on my hand. And here, the first one we have here, you can see this is the Egyptian pound, which is the currency used in Egypt. The next one we have here is the Lesotho Maloti, which is the currency used in Lesotho. So anytime we go to each of these countries, I have currencies of more than 10 different countries. And these are countries that I have personally visited. So what I used to do is anytime I want to cross the border and come back, I always like to come back with the currency of that particular currency as a Forex trader. All right. So the next one we have here is the Central Bank of Swaziland, which is the currency used in Swaziland. We also have the South African rand. We have 10 rand here, which is the South African rand, the currency used in South Africa. We still have 100 pound, which is the currency, the Egyptian pound used in Egypt. And we also have the franc CFA, which is the currency used in Cameroon. And we also have the United States dollar. We also have, this is 100. If you see this, it means, I think I got this from the bank. I have them many because we'll be traveling very soon. And anytime we want to travel, I used to get, I get this so that I'll be able to easily do my transaction. So here we have the United States dollar. You can see, that's the United States dollar right there. All right. We have the United States dollar, and each of these particular currencies, they have something which is very unique, which is called the exchange rate. All right. Each of these particular currencies, they have what is called, they have something which is very unique, and it also supports the power of that particular economy, which is called the exchange rate. So today we shall be talking about the exchange rate and everything you need to know about the exchange rate when it comes to many currencies like this. All right. Okay, so on the video today, we're just going to cover a few things, and the first thing we'll be covering on the video today is what is an exchange rate. So what do you understand by an exchange rate? So let's change the color. I always like for us to use red. So let's change the color to red. All right. So let's just put this somewhere we can easily access. Good. Let's put it here. So what is an exchange rate? That's the first thing we'll talk about. How exchange rates are determined. So how are exchange rate determined? That's something we're still going to be able to talk about, like how are exchange rate determined. Then fun facts about exchange rate. So what are some of the fun facts about exchange rate? That's something we'll still talk about on the video today. So we just have a few things that we're going to be able to cover on the video for today. So it will even start with what is an exchange rate. All right. So what do you understand by an exchange rate? So to just begin, the price, an exchange rate is a price of a nation's currency in relation to another economy. So the exchange rate measures the price of an economy's currency in relation or relative to another economy. All right. So the price of a nation's currency relative to another nation. That's just a simple explanation that somebody can give you when it comes to a currency exchange rate. Okay. So if you can see on my screen, we have different exchange rate. We have different exchange rate here. And if you check on this exchange rate, let's just take the first currency for an example. If we can take the euro, here we have the euro. And the exchange rate for the euro, the first one we have here is what they call the bid or the buy price. And the second one here is called the ask or the sell price. So you can see each particular exchange rate, each exchange rate has two prices. You have what they call the bid price, or the price the broker is ready to sell you that particular currency, or you have what they call the ask price, which is the price the broker is ready to buy that particular currency, or is ready to buy that particular currency from you. Because remember, on our previous videos, we did mention that anytime you buy a particular currency, you automatically sell you automatically sell the quote currency on that currency pair. So let's just take something like Euro USD. All right. Anytime you sell you sell euro on Euro USD, you automatically buy the USD. And anytime you buy euro on Euro USD, you automatically sell the US dollar. All right. So that's how currencies work in Forex. Anytime you sell a particular currency pair, you automatically buy the other one on that particular pair. Okay. So looking on this board, we have all these exchange rates are in terms of the United States dollar. So the first one you are seeing here, the euro, you can also know that the Euro USD. All right. So they are all in terms of the United States dollar. And Euro USD, if I have to explain it, you see we have something here like Euro USD. All right. And the exchange rate between Euro USD is 1.2631. Remember, I told you each particular currency pair is having two prices. The first price is known as the bid price, and the second price is known as the ask price. The bid price is the same as the price the broker is ready to sell you that particular currency, and the ask price is also known as the sell price. The price the broker is ready to sell that particular currency to you. All right. So let's just take the bid price for an example. If Euro USD has the bid price as 1.263. It means for you to be able to purchase 1 euro, let's just take this for the euro. For you to be able to purchase 1 euro note, you need at least 1.2631 of the United States dollar, meaning the euro is more powerful than the United States dollar. All right, because you need more of the United States dollar to be able to buy 1 euro. All right, that's why you see the exchange rate between Euro USD is equal to 1.263, meaning the euro is stronger than the euro is more valuated than the United States dollar. So let's go to this one. How is the exchange rate determined? For us to be able to determine the exchange rate, there are two ways you can be able to determine the exchange rate, right? The first way you can determine the exchange rate is through demand and supply. 95% of all currencies in the world are determined by demand and supply. All right, demand and supply. Let me also circle this. So any currency pair, all the currency pairs that are determined by demand and supply are called, they have what they call the floating exchange rate. All right, they have what they call the floating exchange rate. And the way the exchange rate is determined, if many people are purchasing, if many people want to buy the United States dollar, it means the demand for the United States dollar will be high. And if the demand for any particular commodity or any particular currency is high, it means the price will also go up. So that's how most of this currency, that's how 95% of exchange rates are determined. 95% of exchange rate are determined by the power of demand and supply. As simple as that. The more they demand, the more people demand that particular currency, the more the exchange rate will go up. And the lesser people demand that particular currency, the exchange rate would actually go down. Okay, so if you see, they say the exchange rate for the Great Britain pound is going up. That's why if you open your chart sometimes and you see a particular exchange rate going up, let's just say you take a chart of Great Britain pound USD, and you open a chart, and on that chart you see your price is actually going up. The price is going up at the faster rate. It means the base currency on that particular currency pair is appreciating. And the fact that that particular base currency is appreciating, it means there's a high demand. There's a high demand of that particular currency. There's a high demand of the base currency. All right. The higher the demand, the higher the price of that particular economy, of that particular currency. So that's just how you can, that's the same way. When we start showing you live examples on the chart, that's just the same way you'll be able to read your chart. If you open your chart and let's just assume, instead of it going up, there was instead something like this, the chart was actually going down. It means that there's lesser demand for the Great Britain pound or lesser demand for the first currency on that currency pair. A currency pair is having two different currencies, and the price of that particular currency is determined based on the base currency. And if you want to read your chart, the market direction on your chart, either bullish or bearish, is determined based on the base currency. So if the United States dollar is instead strong here, instead for the chart to be going up or be going down, since this one is the secondary or the quoted currency. All right, so that's just how 95% of exchange rates are determined by the power of demand and supply. The more many people are demanding that particular currency, the more the exchange rate will go up. That's why if you check the United States dollar, let me just show you this chart. That's why if you check the United States dollar from 1980 something to now, the chart has always been going up. The exchange rate of the United States dollar has always been going up, with the reason being that as year goes 2000, 2005, as the year goes by, many people are demanding, many people are purchasing the United States dollar, and as such, the currency or the exchange rate between any particular currency and the United States dollar keeps going up. And then you also have something they call the fix. After the floating, remember the one which is determined by demand and supply is called the floating currency. The floating currency or the floating exchange rate is determined by the power of demand and supply. That one is a floating. Then you also have what we call the fixed exchange rate. The fixed exchange rate. Under the fixed exchange rate, you can see we have something here which is this particular currency. I think is the Zimbabwean dollar, or I think yes, the Zimbabwean dollar. This is the most deflated, the most inflated currency in the whole world, because you can even check here, we have $100 trillion on one note, right? On one note like this in Zimbabwe, you have $100 trillion. Let me try to write out $1. Let me try to write out $100 trillion. $100 trillion is 100. Then trillion is like this. All right, good. The zeros are even here. 1 2 3 4 1 2, like this, guys. See this is million, this is billion, and this is trillion. In Zimbabwe, with one currency, with just one currency like this, you have it. You can see we have it here. This is a Zimbabwean note. On one currency like this, you have $100 trillion on one currency like this. That is an example of a currency that is super inflated, super inflated. And most of those currencies, those currencies like this example, which on one currency or on one note you have $100 trillion. Their rates are determined by fixed. Their rates are determined by fixed. They have a fixed exchange rate, meaning no matter how the demand for this currency is high, or no matter how the supply for this currency is high, the exchange rate will always be the same. All right. The exchange rate, if the exchange rate between United States dollar and Zimbabwean dollar is equal to 1 billion. Let's just say 1 billion. It means even tomorrow, even if the demand for the United States dollar go up, nothing will change. Even if the demand for the Zimbabwean dollar go up, nothing will change, because they have a fixed exchange rate. So that's how the exchange rates are determined. They can either be determined by floating exchange rate, which is by the power of demand and supply, or you have the fixed exchange rate, which is mostly fixed by that particular economy to be able to stabilize an overinflated currency. All right. So with that being said, let's talk about some fun facts about exchange rate. Okay, let's talk about some fun facts about exchange rate, because even when I travel around, every place I go, I always see something which will get me fascinated about that particular currency. So here we say there's something I saw here which is very, very interesting. They say the most valuable foreign exchange is the most valuable foreign exchange is the Kuwaiti dinar. One dinar is what, approximately $3.3. So if you are just asked like what is the most valuable currency in the world, because that one is I think is the Kuwait, the currency of Kuwait. That's the Kuwaiti dinar, because one USD is equal to, one Kuwait dinar is equal to 3.3 USD. All right. So you see how powerful this particular currency is. I mean, for you to be able to buy one Kuwaiti dinar, you need 3.3. You need about 4 USD. You need about four of this. You need about 4. No, I have here only $100. So let's just say if you want $100 of this, that means $100 United States dollars will be about 30 Kuwait dinar. All right, it will be about 30 Kuwait dinar, since one Kuwait dinar is about 3.3 United States dollar. All right. So even talking about the example of, I was talking about the Zimbabwean dollar of one Zimbabwean dollar, one note like this, you can have about $100 trillion. So if you have to exchange that to United States dollar, it means if you go to Zimbabwe with $100, you need to go with actually a car. All right, you need to go with a car to carry the money, and you exchange it to the Zimbabwean dollar. You need to actually go with a car to be able to carry the money, because you can't carry it alone. So that's just another fun fact about exchange rate, or about currencies and different exchange rate. You can see how some currencies are very inflated, some currencies have super crazy exchange rate and stuff like that. And another fun fact, they say the British pound is the 5th strongest currency and the United States dollar is the 10th strongest. So even though the United States dollar is the most demanded, the most demanded currency in the whole world is the United States dollar. It's the most demanded, and the most reserved currency, where people have their reserve, people have their money stored in that particular currency, is still the United States dollar. But that notwithstanding, the United States dollar is the 10th strongest. It's the 10th strongest currency in the whole world, while the British pound is the 5th strongest in the whole world. And then the least valuable, even though we've spoken about the Zimbabwean dollar being so overinflated and stuff like that, the least valuable foreign currency in the world is the Iranian rial. All right, the currency exchange rate is approximately 43,000 rial to $1. So, and it's about 40. So for you to be able to buy, if you go to Iran. All right, if you go to Iran, I think it's, yeah, if you go to Iran and you exchange $1, 1 USD, you have 43,000 Iranian rial. I think this is how, that's how it is. So 1 USD is equal to 43,000 Iranian rial. You see how the least this currency is. There are sometimes they can even come with some of these currencies, the exchange rate is negligible. Okay, the exchange rate is so weak. It's insignificant. The exchange rate is insignificant. So let's just assume, all right, I go to Iran with my $100. So in Iran, if I exchange this $100 to Iran, I think it's Iranian rial. If I exchange it to Iranian rial, I'll be having, you have to multiply this by 100. So I'll be having 4.3 million. So if I go with this plastic, with just this note, this one note to Iran, and I exchange it to Iranian money, maybe I go there for vacation, or I go there just for sightseeing or for sport or anything, and I go with $1. At the airport, I exchange it to Iranian rial, I'll be having 4.3 million Iranian rial. Maybe I wouldn't even be able to carry it by myself or something. That's just another fun fact about exchange rate or about currencies. And then the last fun fact about exchange rate, they say the British pound sterling is the oldest currency still in use. This currency, they started using the British pound before even the 12th century. They already had the coins, they already have things they were using and stuff. So it's the oldest currency, in existence, or the oldest currency they are using up to today. All right, so with that being said, that has taken us to the end of this video. And if you want to make a recap on this video, we've spoken about exchange rate. Anything you have to know about an exchange rate. If you see an exchange rate, what does it represent? If you go to a bank today or at the airport, you see those prices going up and down. At least as a forex trader, you'll be able to read those prices. You'll be able to tell what it means. So that's what we'll be able to cover on this particular video today. So not to forget, please do subscribe. If you are watching and you haven't subscribed to the channel, please subscribe to the channel, because this is, I think, the third video on our full course. Before the end of this series, you have everything you need about forex. So this is our third video, FX103, on this particular course. And if you've gotten some value from this video, please leave a thumb up on this video. And maybe when we reach a particular number of subscribers, and maybe when we reach a particular number, we'll be able to do a giveaway, and some of these dollars can actually be sent to people for free. So please do subscribe to the channel, leave a thumb up on the video. Until then, I will see you guys on another video. Peace.